All right, welcome back, everyone. John Caruso here, RJO Futures, October 20th. Quick look in on the market here. Taking a look at the S&P 500, we're down about 1%. We erased all of the gains that we had going early on this morning. NASDAQ's down 0.70% as well. Very, very weak. We've seen the market right now. It's just kind of in this three-day consolidation pattern where I think it's building a lot of energy to either break out on the upside or break down once again on the downside. Of course, I think the probabilities favor that the market could break back on the downside. Taking a look at some of the data that we saw this morning, initial claims came in 218,000. That was lower than expected, and lower than expected in the claims number is actually a net positive for the employment market. So that certainly did not do the stock market any favor. Obviously, the Federal Reserve right now is trying to target the unemployment rate. They want to see that rate go up. I'm sorry to say that, in order to help stave off demand from the red-hot inflation that we're experiencing right now. Gold, interesting. We saw gold this morning up at 1649 this morning. Try to retest 1650 and is getting batted back down right now. It's back at 1633, which is close to yesterday's lows. We are bearish on gold right now. 1622, we've highlighted that level. That's the line in the sand for the bulls. If 1622 gives way, then we're likely going to see gold prices back into the 1500s relatively soon. So 1622, I remain bearish of gold at the moment. Of course, that could change if something changed, perhaps geopolitically or fundamentally in terms of the direction that the Fed has set monetary policy. But right now, the path of least resistance in gold is lower. Oil prices sitting around just under 85 right now. Below 85 is not good. 85 is the immediate term trade line right there. If we're above 85, we got a shot at making a run above 89. If we can get above 89, we should see it retake 93. However, below 85, 81 is key to hold. 81 is the monthly low, and that monthly chart looks pretty ugly right now in the crude oil market. Crude, it's been a very noisy market here as of late. We've heard recently from Washington, D.C. Of course, they're trying to jimmy rig prices lower. The supply side problems that we're experiencing in that market, they are not going away. Those are going to be with us a year from now. But over the very near term, you got to watch out to see oil prices. If we do break through 81 on the downside, then we're probably going to see that revisit that 76 level. So keep that in mind in crude oil. Copper prices surprisingly strong right now, up 2.5%. That's something that you've got to take note of when you're a macro-based trader in the stock indexes. Copper up 2.5%. We're going to see if it can hold on to those gains throughout the rest of the session. But so far, copper's doing okay. And that's really all we have for you here today. So best of luck to everybody out there. We're going to catch you back here tomorrow. Take care.